Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, so a wild day today, reaction to the FOMC. Then we had Ryan coming out saying the tax revisions are going to take longer than anticipated. So what it resulted in is a complete 180 in the market, which started very, very strong and then closed very, very weak in an all-out dump. And we did not see two 5-minute green candlesticks in a row in the 2 hours at the end of the day after that FOMC minutes reaction. So I am watching this downtrend resistance line. This is very, very important going forward now that we have rejected very clearly another time from it. I was on the verge of giving into the bulls here. Now, I've been very skeptical in the short term just because in March was our lower high and lower low. And on this bounce, it was just another lower high. And today we formed a little higher high by breaking bullish today, a very strong start to the day. So I was getting ready to say, okay, bulls have proven themselves by getting that higher high, and now we're looking back at just a couple of resistance levels before the all-time high. This was a nice reminder why the close of the day is so important, because we have rejected very clearly from this resistance. We closed at the low of the day on a ton of bearish volume, and we are now looking for further downside. One thing that stood out to me on the dump day last time on the 1% move down is we did not see a gap down open. And I looked back at the 2016 January and February dump, the 2008 crash, all these dumps, it's gap downs that indicate the really strong bearish action. So we're going to be keeping an eye out for a gap down tomorrow. And we have a couple key supports we're watching. We're watching 233.91, the low of the week. The 50-day moving average support is going to be just below that. And then the absolute must-hold level for the bulls is 231.61, the low down here of March 27th. So a very clear rejection from that resistance. We've got a couple supports to be watching, but again, we have all kinds of momentum to the downside, and even with the dump at the end of the day, the hourly RSI was nowhere near oversold. It was in the low 40s. We could still drop another 10, 11 points on the RSI before we see oversold conditions. So the bears are in full control right now, and the question is going to be, are we going to break these resistances? Are we going to see a gap down? And it's really all about the tech sector, and I'm going to put out a tech sector video here in just a moment. Watch that tech sector video. Tomorrow, my eyes are glued to the tech sector. It is the key, in my opinion, to seeing a significant market pullback if the tech sector rolls over. And the correlation between the S&P 500 and the tech sector since the election has gone hand in hand. And every time we see financial sector weakness, those are the two biggest holdings in the S&P 500 in terms of sectors. We see financial weakness, it's the tech sector that's holding the S&P 500 up. So if we see it roll over, it's going to change the momentum and change the game in the short term. So SPY on the weekly time frame, keeping an eye out for this bearish MACD cross that's closing in and the bearish TCG cross that's close. And if we lose these exponential supports for the first time since the election, it will absolutely be noteworthy and we'll be in for a test of this weekly middle Bollinger Band support. So it's a very important next 2 days here to end the week. IWM weakness continues. No confirmation of that bullish attempt on yesterday. And an increase in bear volume. So the bulls tried to show up, head back towards the recent highs to break the lower high pattern. No luck. Lower high, now another lower high. And we're looking down at our recent lows. There's not much support in this area. We're looking at 134.08. Then I'm looking down at our double bottom at 132.40. Break that double bottom and we see a significant leg to the downside as we have very key support here, 132.79. And although we broke it, the bulls bought those dips 2 weeks in a row. If we break this level here, if we break more convincingly and break that double bottom of 132.40, the bears are going to take over the trend and it's going to shift. We're going to go from higher lows and higher highs since the election, and we're going to start forming lower lows. and it's going to change the mindset. It's going to put the bulls in the back seat and the bears in the driver's seat, and it's going to be up to the bulls to prove themselves now and shift things around. So it still is not game over yet for the bulls, but we need to be very cautious here because consolidation is due in a lot of these names. A lot of overextended moves to the upside on the weekly time frame since the election, and we're now starting to see that consolidation. Look at QQQ here, a new all-time high. We hit an all-time high and dumped on that dump day. We hit an all-time high and dumped again. Look at the 2 highest volume days we've seen in the past 3 months. It is those dump days. So the bears have momentum. If we lose this middle Bollinger Band support, which is going to line up right with 131.56 support, lose that level, and we're looking down at the low from the last dump of 129.40. The weekly time frame has not seen any kind of weakness since the election. Bulls buy the dip on any weak candlesticks. If we close below the 4-period exponential of 131.59, we will be looking at the bearish MACD getting closer here and the potential to lose exponential moving averages for the first time since the new year, since the last 4 months. So in my opinion, again, just to confirm, it is all about the tech sector. See it roll over. If we see lower lows, if we see XLK lose the middle Bollinger Band, it is going to indicate that the S&P 500 has more weakness ahead. Tons of volatility here, nice day trading opportunities in both directions today, and we are certainly favoring the downside as we start tomorrow. Question is going to be, do the bulls buy the dip again? And if we see a gap down open, we know the bears are for real. I appreciate you watching. We'll check back in tomorrow to see how it all plays out. Make sure you're using stop losses, whatever direction you're playing. We'll see you soon.